is a regular cash flow forecast. This is fine. This is a financial document and shows the expected cash inflow and cash outflow over a future period. So a cash forecast is just what you are expecting, your prediction about cash in the future. Like, oh, in the next 6 months, this is what we are expecting in terms of income. Oh, in the next 6 months, this is what we are going to spend. This is what we are expecting to spend in the next 6 months. That is what we call cash flow forecast. Do we get it?
Yes.
Great. So here we said, this is okay, yeah. So it also shows the closing cash balance at the end of each month. So how do we get our closing cash balance? We get our closing cash balance. Scroll down, please. I'll show you something here. Thank you. This is our opening balance. This is our closing cash balance. First thing, let's look at our total cash inflow. This is our cash inflow. This is our cash outflow. Please look at the board, please.
Yes.
The difference between this and this gives us our. It's okay.
Sorry.
It's okay. Yeah, it's fine. It's okay. Okay, thank you. So, what brings about the cash inflow? We're talking about things that we have sold in the business. Our income into the business is our cash inflow. So, petrol sales. That means we are a business that maybe this is a petrol station. I don't know. So, sales, money will come into the business. We repair for some people, money comes into the business. Car sales, money comes into the business. Miscellaneous sales, money comes into the business. All these are cash inflow for the business. Then we pay wages to our workers. We bought petrol. We bought some parts. We purchased cars. Other expenses. All these are expenditures for the business. Outflow. So the difference between this and this was our net cash flow. I think it's clear to here.
Yes.
So if this is your net cash flow, how do we get our opening balance here? Our opening balance is, okay, we have our opening balance. You have to take note of here, the closing balance here. The closing balance here for June will be the opening balance for July. You get what I'm saying there?
Yes.
The closing balance for June will be the opening balance
For
July. So here we say we have 1,009.
How?
Yes.
Closing in June
Yeah.
and then July.
Yes.
Okay.
When you close, this is what you close with. That's the final amount you have.
Then you start with another amount, but with the same closing balance.
Now, the closing balance for this month becomes the opening balance for next month.
Yes.
Do you get it? So at the end of it here, this is our opening balance, closing balance for 1,009 to be our opening balance for July. Do you get it?
Yeah.
The closing balance for July becomes the opening balance for
July.
August.
Yes.
Do we get it?
Yes.
So the first thing is the net cash flow, which is the cash outflow, the cash inflow minus outflow, which gives us this. What else do we need to know here? How do we get our closing balance? Our closing balance is your net cash flow plus your opening balance. Those are the formulas you have to put in your mouth. We have our net cash flow, which is cash inflow minus cash outflow. Then we have our opening balance, our closing balance, which is your net cash flow plus your opening balance. Gives your closing balance. Your closing balance this month becomes your opening balance for next month. Is it clear? I'm going to write them out. Net cash flow. Net cash flow is cash flow, which is balance. I think that's clear.
Yeah.
So, opening balance is closing balance for the previous month. Closing balance for previous month. Is it clear?
Yes.
Yes. Any questions about this?
No.